Welcome back. Let's take note of Symphony. Now, if you look at the mid-cap index or peers this year, you would see that Symphony as a stock has underperformed this year. It's down about 3% from the same time last year. And a bunch of reasons for it could be one, weakness in domestic demand and also weakness in some of their key geographies. One of the acquisitions that they made last year in Australia as well. But talking about that itself, the company has announced that it will invest about $15 million in its Australian arm. What does that yield for that business? How does it improve prospects? We have Nrupesh Shah, who's the Executive Director of Corporate Affairs of the company, joining in now. Thanks a lot, Mr. Shah, for joining in. Season's greetings to you. You're looking to invest a little over 80 crores in your Australian arm. It seems as if 44 crore of this will come back to you all in the form of receivables. Just wanted to understand, what is the net outflow? How does this change things? And by when does the Australian business start to make enough cash flows to not need any more funds?
Thanks for having me, and congratulations to CNBC-TV18 for completing 25 remarkable years. So yes, as we announced, we have already invested additional 15 million Australian dollar, which in INR terms amount to about 83 crore rupees by way of equity capital. So this acquisition happened in July 2018. However, 15 months post that, on account of onset of COVID, there was a stringent lockdown in Australia, and series of revamping and turnaround initiatives which we had decided could not materialize on account of COVID. So we have initiated converting Australian subsidiary into asset-light, capital-light outsource business model, changing the product profile completely from installed product to mobile product, whether it is for air cooler or heater, and they have been successfully tried and tested in last 2 years, and also substantial reduction in cost of doing the business and asset-light business model. So basically, to revamp the operations and to enhance its overall viability, this fund has been induced. However, out of this, close to $10.5 million, that is about 60 crore, will come back to Symphony India, partly in the form of unsecured loan which was granted, and also in terms of the receivables on account of supplies given to it. And balance is to take care of its corporate fund and working capital requirement.
Okay. Mr. Shah, just to detail quickly then, currently your Australia business is EBITDA negative.
That's right.
And revenues were lower in the previous quarter on a year-on-year basis as well. Can you just detail to us when it's going to become profitable and whether you would need to invest further funds?
So, as we foresee currently, we don't think there may be need of any further fund infusion. I think with this is long-term fund requirement as well as working capital requirement almost gets over. That's number one. Number two, the series of initiatives which we have taken, many of them are at advanced stage or have been already implemented. So we expect to get the result of it starting from current quarter itself. And if everything goes well, next year itself should see reasonable EBITDA positive.
All right. So that's about the Australia business. We'll talk about all the other geographies in just a bit. But due to paucity of time, let's bring the discussion back home. How was the festive season for you this time around? You had indicated that inventory levels were slightly higher than normal at the start of the season. Have they normalized now? What's the outlook for the second half of this year as far as India is concerned?
So as you know, customer sales mainly happens during the peak summer season. Yes. So depending upon the region, it happens during February to June. So until then, it's more about the sale to the trade, and trade normally, that is general trade, sits on inventory for a couple of months or quarter. However, overall sentiments are good. There is a positive offtake on back of weak summer of 2023. And even though some regions and hence distributors were having high inventory.
Okay, all right, Mr. Shah, we're going to have to leave it on that note, but we'll definitely touch base to get a more detailed view in terms of the other business verticals as well. Thanks very much for joining in and speaking with us. So that's Symphony. We need to take a short break. We'll get you more on the markets, a lot more stocks in focus on the other side. Stay tuned.
CNBC TV18, embarking on a quarter century of excellence.